Good morning and welcome to Bazaar Morning Call from the CNBC TV18 EBIX Cash Studio. I am Anuj Singhal, with me Prashant and Sonia, and of course it's Friday, so time to cheer up for the weekend. But you know what, this Friday and this Saturday as well, which is important. I'll explain why. The Nifty is up 2.5%, the mid cap index is up 3% this week. Normally you see some profit taking when you have such kind of a week on Friday, and there's been aggressive FI selling as well. But last hour today is going to be most crucial because HDFC Bank comes out with numbers tomorrow, and the market will take some kind of pre-positioning ahead of that. So let's see. The SGX Nifty in line with the global market showing some bit of decline. Prashant and Sonia, good morning.
Morning, guys.
Hi, good morning. Morning, Prashant. Morning, Anuj. And today's Makar Sankranti as well, right? So happy Makar Sankranti to everyone who's celebrating. I mean, we all have the fondest memories of flying kites in our childhoods. Of course, this time is different because you've got to stay safe, social distancing and all of that, but you can still celebrate in your own small way. But Anuj, I take your point. I mean, the market has had such a big run up until now. It's up, what, 2.5% this week. The mid-caps are up almost 3% this week. Global cues are weak today, so maybe that could be a reason for profit booking, you think? I mean, the Nasdaq was down almost 400 points. The Dow was under pressure. There are inflation concerns there. So do you think that could be used perhaps as a reason for this market to take profits?
Oh yes, the US market has led the correction or fall in global equities. It's a bit eerily similar to last time, and of course, as you said, inflation is emerging as a bit of a concern. But I'll leave that to Prashant. I'll discuss what's happening here. And my sense, Sonia, is that normally, the first gap down in uptrends is used to buy. That's a program trade which happens that you get a gap down, you buy it because you are in an uptrend. Like you saw yesterday as well, the market actually ended at the highest point of the day. Because of that late flourish that we had, especially on the Nifty. Now there's one important technical point that I want to address, technical and fundamental both actually, is on the FIS selling and HDFC Bank. Yesterday FIS sold about 1390 crores, and the HDFC Bank delivery volume on HDFC Bank yesterday was 2050 crores. HDFC Bank is largely owned by FIs, right? If you look at the free float. And yesterday's dealing room check from Nimesh was suggesting that for 2 days now, there's been some large selling in HDFC Bank. Is it coming to an end or not? Because the big question is, why is there so much selling in HDFC Bank ahead of numbers? Either it's a trap, for the shorts, or does someone know the numbers? This is interesting because it started a rally, HDFC Bank stock this month, as we've all seen. It led the Bank Nifty rally, and over the last 2 days has given up 1/3 of that rally. So I think that way it's important, and I think while you may want to pre-position ahead of the numbers, the bigger trade, my senses, would come on Monday once you know the numbers of HDFC Bank, and after that you react on that. And the markets had a one-way move. Some consolidation, some profit taking won't hurt, but it's essentially still a large buy on dips market unless that trend is proven wrong. But of course, the big cues happening in the US market as well. Prashant, what did you make of that?
Morning, guys. Morning, Anuj. I mean, so equity sold off. You woke up this morning and you looked at the screen, the S&P 500 and the Nasdaq, and you saw sharp cuts. Obviously, I mean, the first reaction is that, well, suddenly things have cracked. But the cracks have only appeared in equities, nowhere else, right? And that is important to emphasize. And the sell-off, by the way, came late into the close. What are the other markets which did not react? Well, you look at rates. So yields actually came off by between 5 and 7 basis points. You look at the 5-year, 10-year, even the 30-year yields, nothing. I mean, no real spike up. The dollar, and this is something I put out yesterday in terms of why isn't the dollar rallying when, you've got a perfect cocktail for the dollar to do well. It has not. The dollar did not do well yesterday as well, at least against the major currencies, the G10 currencies. Brent oil prices did nothing special as well. We had news flow, and you would it's natural to try and blame the news flow and connect it to the price action. The news flow was that two Fed board members, who were also voting members, who were so far dovish, sounded extremely hawkish in their commentary last night, right? So it's natural to connect 2 and 2 and say, well, that's why stocks sold off. But, the most natural kind of feedback loop is into market pricing of Fed hikes. And that did not move at all yesterday. It stands at 88 basis points for the whole of 2022 and about 20 basis points in March. So, this seems, what we are seeing is not directly related to what happened overnight in terms of the commentary from the Fed members sounding hawkish, but the signal effect is there that interest rates perhaps are going higher, and what you saw overnight was rotation out of growth stocks into the value part of the segment. So you look at the Dow, for example, or the Russell 2000, those parts of the market did not do as poorly as the Nasdaq did. So important to keep this differentiation in mind. The pain was in equities, and within equities, the pain was in growth stocks, long duration stocks where earnings will come, many years down the line, and the markets are giving very high valuations. That part got compressed. So, keep that in mind. Sonia, so tech is essentially the focus once again. We had numbers from Mindtree. We'll now get numbers from HCL Tech. But the other temptation is to link what happened in the Nasdaq and IT stocks here. It's like chalk and cheese, because IT services make a ton of cash here, whereas the growth stocks in the US are far dated in terms of when earnings will start to flow in.
Absolutely. And, I would be very, very interested to see how Mindtree reacts to its numbers. As Rima was telling us, the numbers are a bit subpar compared to expectations, but the management has still reiterated their guidance. They look at industry-leading double-digit growth. They, a lot of brokerages have raised their target price as well. Nomura has raised its target price to 46.40. But let's not forget that this is a stock that has gone up 160% in the last 1 year and is trading at 39 times. So it's, it's trading at a premium to even its large cap peers. So I would be very interested to see what the street does with this stock today. Of course, as Anuj was also saying, HDFC Bank would be important to see given the sell-off that it's seen. But, Anuj, a quick comment here because, tech stocks, it's been interesting the reaction, right? Wipro down, Infosys up. And on Mindtree, it has been the best-in-class stock up until now. But one fears a bit about valuations.
Sonia, the issue with Mindtree is, it would be expensive even if it falls 30%. The issue with Mindtree is it's the most expensive mid-cap IT stock. Perhaps Coforge would be along with that. When we analyze some of these mid-cap IT stocks, especially these L&T subsidiaries, one more point that we sometimes forget is that these are essentially companies which have low or no float. Mindtree, for example, if you take a look at the Mindtree stock, there's L&T which controls the majority stake. After that, if you see the institutions, then a couple of ex-promoters who also have some residual stake. Essentially, the retail free float in Mindtree is just about 6 or 7%. I think something similar happens in Coforge. So I think for a lot of times these moves are technical in nature. As you said, it's up 160% over the last 1 year or so. But has it done enough to justify 39 times? Absolutely not. Absolutely not. And I think that's one reason why, while on Infosys you will still have almost consensus buy, right? Because of positioning, the stock may have not rallied as much as it should have. But on Mindtree, you will notice that you'll have price targets of 6,000 and you'll have price targets of 3,000, which is something which does not happen with, say, Infosys and TCS. And that is largely a function of float as well, which is a technical function. So that's why, for me, it's very tough to analyze, numbers like Mindtree. It's very easy to analyze, TCS, Infosys of the world. Mindtree and all, they have a world of their own.
Absolutely. And, there are no complaints as far as the earnings are concerned, right? The margins still above, what they did earlier. They did about 21.5% margins and they had guided for 20%. So there are no complaints on the earnings per se. It's just the valuations make one a bit uncomfortable. But let's see how the street reacts to its numbers today. Lots to talk about. First up, we have some equity views coming in for you this morning. We have Vikas Jain of CLSA who says that the foreign investors have sold Indian equities for a third month on the trot, as they sold $2.5 billion and bought Philippines and Brazil in December 2021. FIIs continue to cut their overweight in banks to a fresh multi-year low. Discretionary and communication services also went out of favor for FIIs. These funded big cuts in the underweight of FIIs in IT and energy. CLSA reiterates the preference for lightly owned banks and materials over the well-owned IT sector.
Okay, let's get you some money market views. Then Bhaskar Panda of HDFC Bank says that inflation has come back as the biggest concern in 2022 as various major central banks talk of rate hikes. Dollar index has closed a bit lower this week so far. Oil prices remain elevated as global power wrestle over strategic issues in former Soviet nations. The dollar-rupee pair has come down and the range for the day is seen at 73.75 to 74.
Well, in bonds, Bhaskar Panda is weighing in. He says that benchmark yields have remained elevated on the fears of higher inflation and global factors. He expects the 10-year benchmark yield to consolidate within 6.55 to 6.6% range today.
Okay, let's now